Hello everyone, my name is Nitin Nahar. In this video, we are going to discuss the amendments which have happened between 1st November 2022 to 30th April 2023 as applicable for November 2023 exams. Now, one major change which has happened is FTP 2023. which has come into effect from 1/4/2023. The extent to which FTP will apply for your exams is yet to be prescribed by ICAI. So this particular aspect has not yet been prescribed by ICAI as I record the video, but with time ICAI will come up with a booklet for FTP 2023 and then we will cover up FTP 2023. That means this video covers only GST and custom related amendments. Let me also tell you one thing, that most of the amendments in GST and customs are procedural in nature. That means the underlying law remains same, just here and there procedures have been tweaked a bit. Let's now get into the amendments for your examination. I would also request you to take a printout of this PDF so that you can also mark those things which I am going to do it while reading all these amendments with you. Now, the first amendment is relating to charge of GST, which is with regard to RCM. See, RCM notification covers central government and state government. Two places where it is prominently visible as a supplier is central government, state government providing service to a business entity. Then business entity is responsible to pay the tax. And second one is renting of immobile property by government to a registered person. Then registered person is liable to pay tax. Now, the issue was, what about courts and tribunals providing other than court fee related services? See, fees charged by court or tribunal being court fee is already covered by negative list. There is no GST implication on that. What about other fees or other incomes which courts generate? Let me give you an example. Say suppose this is a court premise. Now, in this court premise, there is a bank ATM. Now, this bank is going to pay rent to the court. Now, the question which arises is, who is going to pay GST on this rental income which the court is generating? Say suppose this was a government premise, then government to registered person will be responsible to pay the tax. What about court or tribunals? Now government has clarified by virtue of an explanation in RCM notification that wherever central government or state government was mentioned, it will also include court or tribunal. That means now on this rent, bank will have to pay the tax under reverse charge mechanism, because wherever court or tribunal was mentioned, it will now include, wherever central government or state government was mentioned, it will now include court or tribunal. Let's have a look. In the RCM notification, an explanation is inserted that all the provisions in RCM notification where central government and state government is mentioned shall apply to parliament, state legislature, court or tribunal. You can draw this and keep here. Okay. Then the next amendment is with regard to exemptions. 3 amendments have happened in exemption chapter. First one relating to National Testing Agency. Let me give you some background. See, when an education institute is conducting entrance exam, it enjoys an exemption. That's already given in the notification. Education institute conducting entrance exam enjoys an exemption. But what about other than education institutes, but they are still government bodies like National Testing Agency? Now, when we talk about National Testing Agency, it is set up by government. National Testing Agency conducting entrance exam, whether the exemption would be available. Now an explanation has been inserted that in case of any authority, any board set up by central government, state government, including National Testing Agency, if they are conducting entrance exam, then they will be regarded as education institute for the limited purpose of conduct of entrance exam. Be very careful. They are regarded as education institute only for the limited purpose of conduct of entrance exam, not for anything else. Similar circular was also introduced for central and state education boards, which are also regarded as education institute for limited purpose of conduct of examination. This is for conduct of entrance examination. So National Testing Agency charging entrance fee, will it enjoy an exemption? The answer is yes, it will enjoy an exemption. Let's have a look at the provision. It's only a limited purpose exemption. Let's see. An explanation is inserted in the exemption notification to clarify that any authority, board or body set up by government, including National Testing Agency, for conduct of entrance exam for admission to a education institute shall be treated as a education institute for limited purpose of conducting such entrance exam. They are regarded as education institute only for this particular limited purpose. What about other services which National Testing Agency provides, sir? That will be liable to GST or any other authority or board set up by government. If they provide anything else, then that will be taxable. They are regarded as education institute only for the limited purpose of entrance exams. Okay. Now, when we talk about access to a road or bridge, there used to be two exemptions. One for toll charges and another for annuity payment. These annuity payments were part payments made by government for roads, which were basically national highways where toll charges were applicable. Now these annuity payments, there was a lot of issue going on with regard to whether it is for construction activity of the roads or it is for access of a road or bridge, and the industry was completely taking a position that they will get an exemption, but officers were taking a position that it will be taxable because it is for construction of roads. To completely remove such difficulties, government has removed the exemption relatable to annuity. That means whatever annuity payments are going to be received will be taxable. But does toll charges continue to be exempt? The answer is yes. See, the impact is not on the consumer directly. Consumer paying toll charges even today enjoys an exemption. The annuity payments which were received from government now will become taxable. Earlier, the exemption was there for both annuity as well as toll charges. But now the exemption is restricted only to toll charges. That means annuity will be taxable. Okay. And the third one is an explanation with regard to residential dwelling. Now let me tell you some background about it, because you have also learned this earlier. May 23 as well had some amendment relating to residential dwelling. Let me take you through it. See, residential dwelling. If residential dwelling is used for commercial purpose, say suppose a residential property being used for commercial purpose, then the taxability is different. If it is used as residence, then the taxability is different. If it is for commercial use, then if you give it to an unregistered person, taxable under forward charge. But if you give it to a registered person, taxable under reverse charge. Because residential dwelling given to a registered person will be liable under RCM. This was added last time. If it is a residence given to an unregistered person, then in that case it enjoys an exemption because twin conditions are satisfied. Residential dwelling for residential use enjoys an exemption. Now coming to such property given to a registered person, government said this will not be exempt, this will be taxable under RCM. This was the law till May 23 exams. Now, just think about it. Say suppose I am a proprietor and registered person. Proprietor of a proprietorship concern, registered person. I take a house on rent for my own use in my personal capacity. I am a registered person, but I take it for my personal use in my own capacity. In that case, whether it should be taxable. Now government has said, except when proprietor uses for own purpose in his personal capacity. See, it should not be taken on rent in the proprietorship name. It should be taken in my personal capacity. Plus, I should use it for my own purpose, not for my employees. Then in that case, exemption will be available. That is the amendment. Proprietor taking a property for his residence in his personal capacity will enjoy a exemption. Now, what I would recommend you to do is, you can pause the video and copy this entire area. Okay, I hope you have copied it. Now let's see the provision. Service by way of renting of a residential dwelling for use as residence, except where residential dwelling is rented to a registered person. This is the plain exemption entry. An explanation as hereunder has been inserted. For the purpose of the exemption under this entry shall cover. Shall cover meaning you will be eligible for the exemption. Services by way of renting of residential dwelling to a registered person where registered person is proprietor of a proprietorship concern and rents it in his personal capacity for his own use. It should not be a company renting out for directors, not a partnership firm renting out for partners. Proprietorship concern for his own use. And it is on his own account, not in the name of proprietorship concern. Then the exemption would be available. Okay. The next amendment is with regard to ITC reversal for non-payment of consideration within 180 days. I am sure you are already aware of this particular provision. If the recipient fails to pay consideration to the supplier within 180 days from the date of invoice, then the recipient has to reverse ITC along with interest at 18% per annum. Now, if proportionate amount is paid, whether full reversal will have to be done or proportionate reversal, government has clarified that proportionate reversal will be required, because if some amount is paid, then reversal will be only to the extent of amount not paid. Let me show you an example. Say suppose value of invoice was 100, GST 18, total 118. Now if I don't pay 118, then I will have to reverse 18 rupees. But say suppose I have paid 59, then the unpaid amount is 59. Now in this case, what will be the reversal? 59 minus 59 will be 118. 118 minus 118 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 will be 118. 1 In this case, the reversal will be only to the extent of unpaid amount. And say suppose 18 is here, then unpaid amount is 59 and 59 is along with GST. So divide by 118 into 18, which comes to 9 rupees. So I will have to reverse only 9 rupees. Government had always intended this. From the start the law was same. Only while amending last time, government had missed out this proportionate point. So now they have added that, and now proportionate payment made, reversal will be only to the amount extent not paid. Let's see it. Proportionate reversal of ITC. Where registered person has paid the amount towards value of supply wholly or partly, then he shall pay or reverse. If you see carefully, this partly is extra. This is the amended portion. An amount equal to ITC availed in respect of such supply, proportionate to the amount not paid to the supplier, along with interest under section 50. While furnishing the return in GSTR-3B for the tax period immediately following 180 days from the date of issue of invoice. The moment 180 days expire, next return which you are going to file, in that please reverse ITC and pay the interest. Okay. Now, the next one you'll mark it as important for case study. Section 41, really important amendments which has taken place. Now, let me give you a recall. You remember 6 conditions for availing ITC? Try to recall. First one, you should be in possession of an invoice. Second, you have received the goods or services. Third, supplier has paid the tax to government. Fourth, you have filed a valid return. Fifth, supplier has furnished the details in his GSTR-1 and it is communicated to you in GSTR-2B. Last one, it should not be a restricted ITC under section 38. Now, the third condition was supplier has paid the tax to government. Now, the problem was whether for a particular invoice, whether supplier has paid the tax or not, I can never find out. Even today, I cannot find out whether supplier has paid the tax for that particular invoice which was issued to me. There is no tool available for that. But I can always check whether supplier has filed his GSTR-3B or not. Now government has linked this condition with GSTR-3B filing of the supplier. That means I will have to reverse ITC if supplier does not file his GSTR-3B. Let me show it to you as an example. See it very carefully. Say suppose we talk about July 2023. Now, supplier filed GSTR-1. Recipient views it in GSTR-2B. So till now no problem. Supplier has filed his GSTR-1. I have seen it in GSTR-2B. Recipient avails ITC in GSTR-3B. Sir, can we avail ITC in GSTR-3B? Yes, section 41 used to allow self-assessed ITC. Whatever you compute as your ITC, you can avail that ITC in GSTR-3B even before supplier has paid the tax. Oh, it was allowed, sir. Yes, that is even today allowed. You can happily take ITC in GSTR-3B. Then what happened, sir? Supplier did not file GSTR-3B for July. Now, if you notice carefully, supplier has not filed 3B. That means government has not got its taxes. But you would have availed ITC. You have utilized it also. But supplier has not yet paid the tax to government. Now, The provisions are very clear that if a person does not file 3B, next month he will not be allowed to file 1. So you will get to know with time that this supplier has not filed 3B. Plus there is a tool available where you can enter GST number and check whether the other person has filed 3B or not. If he has not filed 3B, you will keep calling him, hey supplier, please file the returns. If you don't file the returns, I will have to reverse ITC. Now till when can you wait for the supplier to file his GSTR-3B for this month? This was not given in the law. Now it is defined. Now the law says till 30th September 2024. People, it's a very long time. After the financial year, what is the financial year? Financial year is 23-24. After the financial year, 30th September. So 30th September 2024, if supplier has not yet filed GSTR-3B for July 23, then now my life is in danger. I mean, now I will have to reverse ITC. Is government giving a good time? Yes. Next financial year, 30th September. If till now supplier has not filed GSTR-3B, then the recipient will have to reverse ITC before 30th November 2024. Recipient to reverse ITC availed earlier. Sir, will interest apply on this reversal? Now the law has said, if you reverse till 30th November 24, no need to pay interest. Interest will apply only from 1st December onwards. Is it, sir? Yes, this is a very good point. Interest will apply only on 1st December onwards. 18% per annum under section 50. So be very careful with regard to this aspect. Has government now made recipient responsible for GSTR-3B of the supplier? The answer is yes. If supplier has not filed his GSTR-3B, recipient will have to reverse ITC, because law will assume that supplier has not paid the tax. As one of the conditions is not fulfilled, the recipient will have to reverse ITC. But sir, what after 30th November if supplier files the return after that? People, if supplier files the return after 30th November, after you have done the reversal, then you can re-avail ITC. But in this case, will the time limit for availing ITC be applicable? The answer is no, because the time limit, that is 30th November, is only for availing ITC, not for re-availing ITC. So the time limit will not be applicable. Can we re-avail ITC after supplier has filed after that? The answer is yes. For example, say suppose supplier files in January 25. In January 25, supplier has filed this July 2023 return. Can you avail ITC again? Yes, that is called as re-availment, and in this case, time limit will not be applicable. That is, the last date to avail ITC will not be applicable. This is given in the provision. Let's have a look at the provision. Plus, I would also recommend you that after reading the provision, you write this as an example, because this can come as a case study. They can provide you all these facts and you will have to answer by which date should you wait for the supplier to file 3B, and second, by which date are you required to reverse ITC. Let's see. Every registered person shall be entitled to avail credit of eligible ITC as self-assessed in his return. Oh, whatever he has self-assessed, he can take. And such amount is credited to e-credit ledger, subject to conditions and restrictions as may be prescribed. Let's see. the credit of input tax availed by the registered person in respect of such supplies, the tax payable whereon has not been paid by supplier, supplier has not paid the tax, shall be reversed along with interest by the said person as may be prescribed. Now, this has been prescribed. Rule 37A prescribed that if supplier has not filed 3B of the said tax period, in our example, said tax period was July 23, till 30th September following the financial year, in which ITC for such invoice or debit note has been availed, then the recipient will have to reverse ITC in his GSTR-3B on or before 30th November following such financial year. Interest shall be payable if reversal is not made within 30th November. After 30th November, from 1st December, interest will start. Where the said supplier makes payment of tax for the aforesaid supply, the registered person may re-avail the amount of credit reverse as may be prescribed. Let's see what is prescribed. 37A has prescribed that recipient may re-avail ITC in his 3B after supplier furnishes 3B for the tax period. Once supplier has furnished 3B for the tax period, you can take ITC. You can re-avail, sir. Okay. Now, the next point is something related to returns chapter. Let me tell you other kind of cheating which was happening. One kind of cheating was people were filing GSTR-1, not filing 3B. For that, government has now made the recipient responsible. But what about a case where in GSTR-1, I report sale of 100, GST 18, and all my recipients are taking ITC of this 18 rupees. And in GSTR-3B, I report sale of 100. Then no problem. But say suppose I report sale of 10 and GST of 1.8. 11.8, here 118. Now, this kind of cheating was also happening, where in GSTR-1 you were reporting a higher sale so that your recipients can avail ITC, and in GSTR-3B you were reporting a lower sale, so you are paying only 1.8 while recipients are taking ITC of 18 rupees. This cheating was also done. Now, to curtail this kind of cheating, government has given a power to officers that if there is a mismatch between 1 and 3B, that is, you have reported more in 1 and less in 3B, then officer will issue a notice. You have two options. One, to pay the differential tax, that is pay 16.2, or give an explanation of why there was a difference. So you have two options. One, pay the tax along with interest, or give an explanation within 7 days. If you don't do any of these two, you will not be allowed to file next subsequent tax period's GSTR-1. They will block your GSTR-1. Now, already there are cases where you will not be allowed to file GSTR-1. Let me give you a recall. If you don't file May GSTR-1, you can't file June GSTR-1. If you don't file 3B of May, you can't file 1 of June. And now the government is saying, if there was a mismatch, you received a notice, you did not reply, you did not pay the differential tax, then in that case, subsequent period, you will not be allowed to file GSTR-1. This is the provision. Now, the law is yet to define how much of difference will require a notice. That means not said to what percentage, that if it crosses this percentage then notice will be issued. That is not yet defined. It says as may be prescribed, in future it should come. But for your exams, most important point is If you don't reply or don't pay, then officer will not allow, the system will not allow you to file GSTR-1 for subsequent tax period. Clear? Sir, what if reply is not satisfactory? Then officer will recover the amount under section 79, because this is a self-assessed tax. You are only self-assessing. If there is a difference between 1 and 3B, it's a self-assessed tax. It can be recovered under section 79. Let's have a look at the provision. Rule 88. Manner of dealing with difference in liability reported in outward supply. This is GSTR-1, and in the return. This is GSTR-3B. Let's see. If the tax payable by a registered person as per GSTR-1 or IFF in respect of a tax period exceeds the amount of tax payable under 3B by such percentage and amount as may be recommended by GST Council. Now this such percentage and amount is not yet recommended. The said registered person shall be intimated through form DRC-1B electronically on the common portal, and copy will be sent to his registered email ID. The intimation will direct to either pay along with interest through DRC-03. This is a separate form for payment of self-assessed tax, or explain the difference within 7 days. The registered person shall either pay the liability or furnish a reply electronically on the common portal giving the reason for difference. Where the amount is not paid or reply is not found to be acceptable, amount shall be recoverable under 79. And you know modes of recovery. There are various modes of recovery which can be used by officer during section 79. Okay. Now see this note. Mark it as important for case study. Let's see. A registered person to whom an intimation has been issued on the common portal for a tax period shall not be allowed to furnish details of outward supply under 37 in GSTR-1 or IFF for subsequent tax period unless money is deposited or reply has been furnished. If you don't furnish the reply, if you don't pay the taxes, then you will not be allowed to file for subsequent tax period. Okay. Now coming to registration. People, some procedural changes have happened in registration. Let me tell you about it. First, there were a lot of cases where PAN of some other persons were being used to take GST registration, and in such cases there was one difficulty which was happening. Actually, there was no such person who was liable, but it was being taken. Now, in case of registration, what was the difficulty being faced? The difficulty was PAN of certain persons who are underprivileged or who have not used it for a long time. This was being used by fraudsters. What were they doing? These fraudsters were using the PAN of the other person and taking fake GST registration. Why will you take a fake GST registration? So that the recipient can take ITC and then you don't file the returns. This was happening in India. Now government has said that the moment you enter the PAN while taking registration, OTP will be to the email ID and mobile number which is linked to the PAN. So if it is your PAN, the OTP will come to you in the email ID and mobile number which is linked to the PAN. Earlier, you could enter any mobile number and email ID. Now, the mobile number and email ID will be the one which is linked to the PAN, so that fake registrations can be curtailed. Plus, The second important thing which has taken place is, say suppose a common portal identifies a transaction to be a high risk case. Say suppose at a particular place a good number of registrations are being taken and you know that that place cannot have so many registration. Then common portal will identify it as a high risk case, and the moment common portal identifies it as a high risk case, then a biometric based Aadhaar authentication will have to be done. That means the registered person or the authorized signatory has to go to a facilitation center to get his PAN and to get his Aadhaar authenticated. Plus, he will have to take the original documents with him. He will have to take his photograph and show it at the facilitation center. This particular point has started only for Gujarat as of now. The provisions also clearly say that it is only for Gujarat, where common portal will identify and then the entire process of biometric based Aadhaar authentication will have to be completed. Plus, in such cases, 7 working days will be replaced by 30 days. Deemed registration, 7 working days will get replaced by 30 days. Now, there were already some cases where 7 working days was replaced by 30 days. One, Aadhaar authentication not opted for. Second, opted for Aadhaar authentication but did not complete within 15 days. Third, where PO deems it as a fit case to carry out physical verification before grant of registration. And now the fourth case is where common portal identifies it as a risky case. Then in that case, 30 days will be applicable for deemed registration. Let's have a look at the provision. 2 basic changes. One, PAN, and second, biometric based Aadhaar authentication. Let's see. PAN linked to mobile number and email address will be captured and recorded in REG-01, which is the registration application, and OTP based verification will be conducted at the time of registration on such PAN linked mobile and email address to restrict misuse of PAN by unscrupulous elements, fraudulent elements, without knowledge of the said PAN holder. Second point, a pilot project, test basis, it is started only in Gujarat. This one is conducted in the state of Gujarat for biometric based Aadhaar authentication and risk based physical verification of registration applicants. Amendment to Rule 8 and 9 has been made to facilitate the same. This will help in tackling the menace of fake and fraudulent registration. This is to eliminate fake and fraudulent registrations. In order to improve the registration process, biometric based Aadhaar authentication of high risk applicants who opted for Aadhaar authentication, they have completed Aadhaar authentication but still system deems it as a high risk case, has been introduced on pilot basis in Gujarat. The applicant who has opted for authentication of Aadhaar and is identified by the common portal is going to identify this based on data analysis and risk parameters, shall be followed by biometric based Aadhaar authentication and taking photograph of the applicant, where applicant is individual. If it's a proprietorship firm, individual only has to go, or of such individuals where applicant is not an individual. It will be partner, karta, managing director, trustee, along with verification of original copy of documents uploaded with the application at one of the notified facilitation centers. And this can be asked in your exams. the application shall be deemed to be complete only after completing the process laid hereunder. That means only once you complete the biometric based Aadhaar authentication, only thereafter the application is said to be complete. Thereafter ARN will be generated, application reference number. From here that 30 days will be counted. Okay. Deemed approval of registration. 7 working days is replaced by 30 days. See, these 2 points were already there. This is the amendment. Where applicant fails to undergo Aadhaar authentication, this was already there. Does not opt for Aadhaar authentication, this was also there. PO deems it as a fit case to do physical verification before grant of registration, this was also there. Plus additional commissioner, ACDC, assistant commissioner, deputy commissioner approval is required in this. And where a person who has undergone Aadhaar authentication is identified on the common portal based on data analysis and risk parameters to carry out physical verification. This has started only in Gujarat. Okay. Next one, there are some very small procedural areas which you can quickly go through. Not very important for exams, but as it is part of amendment, you should know it well. Earlier, there was no tool available for applying for TDS TCS cancellation. Which TDS TCS? TDS, which is made by government department, and TCS, which is to be collected by e-commerce operator. So if you have taken a TDS or TCS registration, you could not voluntarily apply for cancellation. Now can you do so? Yes, the law has been amended saying that now you can make a request of TDS TCS cancellation. Earlier only officer could do it. Officer could cancel your registration. Now you can apply and thereafter based on your application he can cancel it. Okay, e-invoice. People, are there some people who are not required to generate e-invoice? Yes, let me give you a recall. Even if their turnover is more than 10 crore in any of the preceding financial year starting from 17-18, even in such cases, some people are not required to generate e-invoice. SEZ unit, banking company, insurance company, transportation of passenger service providers, GTA, government department, local authority, multiplex screens. These are not required to generate e-invoice. Now, they are now required to give a declaration on the invoice that though our turnover exceeds the limit, but we are not required to generate e-invoice. This declaration has to be given on the invoice. Let's see the declaration. I/we hereby declare that though our aggregate turnover in preceding financial year from 17-18 is more than aggregate turnover notified under Rule 48.4. What is the aggregate turnover notified as of now? For November 23, 10 crores. We are not required to prepare invoice in terms of the sub-rule. So we are not required to prepare invoice. Okay. Then invoice issued for supply by or through e-commerce operator or OIDAR service providers to unregistered recipients. Now, let me give you a recall. In an invoice, if the value is less than 50,000, then in that case, you are not required to mention name and address of the recipient. Try to recall. If the value is less than 50,000, then you are not required to mention name and address of the recipient. Now, government has made it mandatory to mention name and address of the recipient along with PIN code for these 3 categories. Which 3 categories, sir? By e-commerce operators, through e-commerce operators, OIDAR service providers. Because if they don't mention the correct amount of IGST distribution to the states will not happen. Now, say suppose an OIDAR supplier is outside India. If OIDAR supplier outside India is providing service to an unregistered person in India, not in the course of business, then such unregistered person is not required to pay tax. OIDR has to take a registration in India and pay tax. But the problem was OIDR will charge IGST. Which state will get that IGST? Sir, they will mention the address. Address was not required less than 50,000. Now government has made it compulsory that for these three categories, you need to mention name, address along with PIN code. And the moment you do this, you will get to know the state which should get the revenue. So this government has done so that IGST can be shared properly to the states and that data is readily available. Let's have a look at the provision. Provision is very simple. Where any taxable service is supplied by or through e-commerce operator or by OIDR to a recipient who is unregistered, then irrespective of the value, a tax invoice issued by registered person shall contain name and address of the recipient along with PIN code and name of the state, and the said address shall be deemed to be address on record of. This will help in distribution of IGST. Clear? Okay. Then invoice cum bill of supply. People, this invoice cum bill of supply, you can issue this for both taxable as well as exempt supplies. This provision was starting with a notwithstanding clause. It said that notwithstanding anything. Now that became a very strong provision. It also meant that you are not required to mention anything in invoice cum bill of supply because this provision is overriding everything. Government has now clearly provided that invoice cum bill of supply has to contain the details which are required to be there on a tax invoice. That's the only change. So whatever details are required for invoice, same details should be there on invoice cum bill of supply as well. That's the only change. Okay. One amendment with regard to E-way bill. Now, E-way bill, see, jewelry, there was no need to generate E-way bill. This remains as it is. But what about artificial jewelry, imitation jewelry? Now, artificial jewelry, now E-way bill will be required. Is it, sir? Yes. So, be very careful. Earlier, any kind of jewelry, no need to generate E-way bill. Now, imitation jewelry, E-way bill required. Other jewelries even today enjoy a exemption. So, artificial jewelry, should E-way bill be required? The answer is yes. Okay. The next one is a very small amendment with regard to e-cash ledger. See, once you create a challan on the portal, you get CPIN, Common Portal Identification Number. Then you complete the payment, you get a CIN, Challan Identification Number, which is communicated by the bank to the common portal. And the moment bank communicates CIN to the common portal, the credit comes in your e-cash ledger. Now, sometimes bank failed to communicate CIN to the common portal. At that point of time, RBI has e-scroll, which it maintains for government payments. Based on that e-scroll, which matches to the CPIN, they used to credit it in the e-cash ledger on the next day. This used to happen. But there was no provision with regard to this. Now a provision has been inserted. It used to happen earlier as well. Now a provision has been inserted. Let's see. Where the bank fails to communicate details of CIN to the common portal, The e-cash ledger may be updated on the basis of e-scroll of RBI in cases where the details of said e-scroll are in conformity with the details in challan generated in form PMT06, where you get a CPIN. Okay. Now, people, government has given a relief for late fee of annual return. Now, let me tell you what was the late fee for annual return. Earlier, the late fee for annual return was 100 rupees or 0.25% of turnover in a state, whichever is lower. You are aware. Even today, the same thing is applicable for a person whose aggregate turnover exceeds 20 crore. So for that financial year for which you are filing annual return, if your aggregate turnover is more than 20 crore, no relief. Same 100 rupees per day or 0.25% of turnover, whichever is lower. Relief is for small taxpayers. If the turnover was up to 5 crore, then 25 rupees per day or 0.02% of turnover, whichever is lower. And if it is between 5 crore to 20 crore, 50 rupees per day or 0.02%, whichever is lower. So only difference between 5 crore to 20 crore is up to 5 crore 25 rupees, because 0.02 is same, and more than 5 crore but up to 20 crore 50 rupees or 0.02. So 0.02 is same, 25 is replaced by 50. Clear? Okay. Mark this important. Refund due to a unregistered person. Refund due to a unregistered person. Let me tell you the problem which used to happen, and then I will tell you what is the solution by government. Now, I booked a flat. Congratulations, sir. Now listen to the full story, people. I booked a flat and now I am paying installments. At the beginning, I would have paid some X amount. Then I keep paying the installments. Then I don't want to buy the flat. Because of any reason, I don't want to buy the flat. So now, last 2 years I have paid so much money. That money will come back to me. The question is, what about the GST which I paid for that under construction property? 1 second, sir. GST also you should get back, sir, because now there is no supply. See, there was a supply and that's why the builder charged GST. Now when agreement is getting cancelled, there is no supply. Builder should give back the GST to you. Now the problem was, builder was unable to issue a credit note because the time limit for issuing credit note was already over. Sir, what is the time limit to issue credit note? 30th November after the financial year or date of filing annual return, whichever is earlier. So that 30th November date had already passed. I had started paying 2 years back. Now the 30th November date is already passed. Now builder cannot issue a credit note to me. That means he cannot claim back the taxes from government. So he was not giving it to me. I used to suffer. Even though there is no supply which has happened, the tax which I have paid is with the builder. And supply has also not happened. Sir, but builder does not have it. Yeah, I mean builder had paid it to government. So government has my money. Now, sir, you go and apply for refund. The another problem was, how does an unregistered person apply for refund? Though I have borne the tax, it is very clear that I had borne that tax and now no supply has happened. So I should get back my money. Now unregistered person, there was no option to apply for refund. Now a utility is being created that in such cases, where recipient is unregistered. In such cases, recipient can apply for refund by taking a temporary ID on the GST portal, and now he can now he can file a refund application even though he is unregistered. Is it, sir? Yes. Now the question is, what will be the relevant date? Because don't forget one thing, refund application can be only filed within 2 years from the relevant date. Now, in such cases where recipient is claiming the refund, the relevant date was date of receipt of goods or service. But the problem which is happening is, here there is no supply, so there is no receipt of goods or service. Government has clarified that the relevant date will be date of cancellation or termination. That means whenever my contract gets cancelled or terminated, from that day I will get 2 years time for claiming refund. Is this a good point, sir? Very good point. In my view, government has done a wonderful job. One, unregistered person can claim refund. Second, the time limit of 2 years will start from the date of cancellation or termination. Sir, what if only partial amount is returned to me? This is one bad point. They have said that if only partial amount was returned to you, then GST refund also you can claim proportionately. To give you an example, say suppose 10 crore was the flat value. I had paid 10 crore into 5%. That means I had paid 50 lakh. Correct. I had paid 50 lakh. Now, this 50 lakh I can claim as refund if the entire 10 crore is coming back from the builder. But if builder is giving me only 5 crore, then in that case I can apply for refund only to the extent of 25 lakh. To my understanding, this is not the correct position, but in exam you'll have to write this only, because to my understanding there is no supply even for that particular 5 crore. Breach of contract is never a supply. But here you'll have to write the answer given by the circular and notification. Let's have a look at the provision. Refund due to, just mention refund due to an unregistered person. Let's see. There are cases where unregistered buyers who have entered into the agreement with builder for construction of flats and have paid the amount towards consideration for service along with tax had to get contract cancelled subsequently due to non-completion, delay or any other reason. Good, very wide, any other reason. In a number of cases, the period for issuance of credit note under section 34 may already have got expired. In such cases, supplier may refund the amount after deducting tax collected. So supplier will not refund the tax amount. Now tax amount is with government. Similar situation used to happen in long-term insurance policy, where premium was paid upfront at the beginning along with GST and policy is subsequently terminated. This can be single premium annuity policy, where you took the policy, you paid the entire amount at the beginning, but then you want to subsequently cancel it. There was no facility available for unregistered buyers or recipients for claiming refund. In order to enable such unregistered persons to file application, a new functionality on common portal allows unregistered person to take temporary registration and apply for refund under refund for unregistered persons. Further, Rule 89 has been amended to prescribe the documents to be furnished. You'll have to furnish a document statement of all the details of payment, details of invoices, agreement, cancellation, all that has to be given, plus one certificate from the supplier that supplier is not going to claim that money and supplier has not paid you. Let's see. A statement containing details of invoices for which refund is being claimed, along with its copy, proof of making payment to supplier, your bank account, copy of agreement entered at the beginning, letter issued by supplier for cancellation, and certificate from supplier that he has paid the tax and not issued a credit note. It can't be a double benefit. Supplier issues credit note and then you also want to claim a refund. Double benefit should not be taken. Okay, this is a good point. Relevant date. In case refund is by other than supplier, date of receipt of goods or services. In the given case, date of issuance of letter of cancellation by the supplier will be considered as receipt of service. This is a very good point. Okay, where the amount paid back by the supplier is less than the amount paid by such unregistered person to supplier. I had paid 10 crore but he is giving me only 5 crore. Then only proportionate amount of tax shall be refunded. Okay, great. Now another very small change in appeal and revisions, very small change. See, let me give you a background. Adjudicating authority, and then you file an appeal to appellate authority, and then appellate tribunal, then High Court, Supreme Court. Now when you are going from adjudicating authority to appellate authority, adjudicating authority is basically the officer who has passed the order. He would have passed an order. Now while you are filing an appeal, if this order is already uploaded on the portal, then you are not required to submit a self-certified copy of this order. And whenever you file an appeal, a provisional acknowledgement is given. That provisional acknowledgement is the date of filing of appeal. If order is already uploaded online, if it is uploaded online, then date of filing appeal will be date of provisional acknowledgement. Whenever you got that provisional acknowledgement, that will be the date of filing the appeal. Sir, what is the relevance of date of filing the appeal? People, there are time limits. Appeal has to be filed within the time limit. If you don't file the appeal within the time limit, then you have to apply for condonation. And that's why date of filing the appeal is an important date, because there are timelines. Okay. Sir, what if the order was not uploaded? Say suppose the order was not uploaded on the common portal. Then in that case, you submit a self-certified copy. Self-certified copy of order within 7 days of filing getting provisional acknowledgement. If you file it within 7 days, then date of filing will be date of provisional acknowledgement. If you don't file within 7 days, then whenever you file self-certified copy, that will be considered as date of filing appeal. So basically a procedural aspect, people. Understand the process. Let me sum it up. When you file an appeal, provisional acknowledgement is given at that point of time. If the order is already uploaded, then final acknowledgement will be issued, and whatever was the date of provisional acknowledgement, that will be the date of filing appeal. If it is not uploaded, then in that case you give the self-certified copy within 7 days. Then in that case, whatever was the provisional acknowledgement date, that will be the date of filing appeal. If you give it after 7 days, then in that case the date of filing appeal will be whenever you give that order. Let's have a look at the provision. When an appeal to appellate authority is filed, provisional acknowledgement is issued on the date of filing appeal along with relevant documents. Following two circumstances are given in the law. Where the order or decision appealed against is uploaded on the common portal. In such cases, final acknowledgement will be issued and there is no need to give self-certified copy, and the date of issuing provisional acknowledgement will be the date of filing the appeal. If it is not uploaded, then you have to give a self-certified copy within 7 days. Date of filing appeal will be date of provisional acknowledgement. Otherwise, the date of submission of self-certified copy shall be date of filing such appeal. The worst part, this is applicable to both aggrieved person as well as department. Can the department also file an appeal? Yeah, obviously yes. So this is applicable for both. Sir, why has government done this, that we have to give a self-certified copy? So that appellate authority is sure that the appeal which is being filed is correct. There is an order in place. That's the only purpose. Okay. Plus, a provision has been added that you can withdraw an appeal. Oh, is it, sir? Yeah. You can withdraw an appeal which you have filed. This is allowed. Sir, what if I withdraw and then I want to again re-file the appeal? Then again you will have to check the time limit for filing appeal. If it is within the time limit for filing appeal, then you can again refile an appeal, no problem. Plus, whenever you are filing for withdrawal after final acknowledgement has been issued, then obviously the appellate authority will give you that withdrawal. You can't just file the withdrawal and keep quiet. Appellate authority will hear the withdrawal application and allow it within 7 days. Let's see. The appellate at any time before issuance of show cause notice or before issuance of order, whichever is earlier, in respect of an appeal may file an application for withdrawal. See, remember one thing. Sir, can a show cause notice be issued by appellate authority? Yeah. If you see section 107 carefully, appellate authority has the power to enhance the liability. But if there is an enhancement of liability, it cannot be done without a show cause notice. And that's why you find this show cause notice. So before show cause notice or before order, whichever is earlier, in respect of any appeal filed, may file application for withdrawal of the said appeal by filing an application. Where a final acknowledgement is issued, withdrawal of said appeal is subject to approval from appellate authority, and such application for withdrawal of appeal shall be decided by appellate authority within 7 days. Further, fresh appeal may be filed pursuant to withdrawal, which should be within the time limit specified under 107. So it should be within the time limit, then no problem. Okay. Next one, again a very small change yet important change. Anti-profiteering measures. You remember anti-profiteering measures? Anti-profiteering measures. There was a authority called as National Anti-Profiteering Authority. National Anti-Profiteering Authority. If a person has profiteered from the GST amount, that means he availed ITC but did not pass the benefit to the consumer, or there is a reduction of tax, 18% is reduced to 12%, but you have still not pass the benefit to the consumer, you have increased your prices. Then in that case, National Anti-Profiteering Authority could catch such persons. Now, National Anti-Profiteering Authority was valid only for 5 years. After that, sir? Now, the question was, what after that? National Anti-Profiteering Authority is now no more there. But whatever National Anti-Profiteering Authority was, the power which was given to them is now to be there in the hands of Competition Commission of India. So all the powers which were there with NAPA has been given to Competition Commission of India. Now NAPA is no more there in existence. Only Competition Commission will be handling these cases of anti-profiteering. All other provisions remain same. The process remains same. The orders which they can pass remain same. Only the tenure part is deleted, and NAPA, who all will be members of NAPA, that is also deleted, because now everything will be controlled by Competition Commission of India. Let's see. Section 171 makes it mandatory that any reduction of tax or benefit of ITC shall be passed to the recipient. Now this is the change. Competition Commission of India, established under Competition Act 2002, is the authority empowered by government for this purpose. Plus, earlier it was called as duties of the authority. Now it is called as functions, but everything remains same. They can tell the other person to reduce the prices, return it to the recipient. If recipient is not available, deposit to Consumer Welfare Fund, impose a penalty, cancel the registration. Same powers, same process. I have just given it here so that you can view it here. Otherwise, everything else remains as it is. So, NAPA, you can directly read from here. Clear? Okay. So, these were the amendments relating to GST which have happened. Now, coming to some circulars. Simple circulars issued. Let's have a look at the circulars. Okay. Circular 184, a very interesting circular. ITC if the place of supply is outside India. I'll tell you a transaction. See, Section 12 deals with place of supply where the supplier and recipient is in India. Let me take an example. Supplier is a transporter of goods and he is in Bangalore. Recipient is the consignor who is also in Bangalore, and the goods are being transported from Bangalore to US. What is the place of supply? Let's see. First, it is transportation sector. Supplier is in India, recipient is in India, so you will use 12. But 12 says something. 12 subsection 8 says that if the goods are being transported to a place outside India, then the place of supply will be destination. Now, if the place of supply is destination, then place of supply is US. Sir, will GST apply on this transaction? The answer is yes, because you will not get foreign exchange. Both the supplier and recipient are in India. You will not get foreign exchange. So it is not a export transaction. No forex. So it is not a export transaction. That means will GST apply, sir? Yes. Supplier will have to charge to recipient. What will be the type of tax, sir? IGST. Why? A. Location of supplier, Bangalore. Place of supply US. What will be the type of tax? IGST will be applicable. Now the question is whether the recipient will get ITC. That was the only question. Whether recipient will get ITC. CBIC has clarified, though the place of supply is outside India, recipient will be eligible for ITC. Let me sum it up. Supplier and recipient are in India. Place of supply is outside India. It's a taxable supply. Can the recipient avail ITC? The answer is yes. Even though the place of supply is outside India, ITC will be available. That's what government has said. Let's have a look. Issue. Place of supply under section 12(8) for transportation of goods including mail or courier is destination if the goods are being transported outside India. The issue was with regard to type of GST and eligibility of ITC to the recipient when place of supply is outside India. It is clarified that it will be an interstate supply and ITC would be eligible to recipient even though place of supply is outside India. My recommendation would be that you pause the video and write this entire thing. Make a note of it. Okay. Great. Okay. Circular number 185. Very simple circular. In fact, you guys have been doing it in your classes. I am sure that you all have done it. People, say suppose. See, there are two cases. One is section 73, which has the time limit of 2 years 9 months to issue notice, and section 74, which has the time limit of 4 years 6 months to issue notice. Correct? 73, 2 years 9 months. 74, 4 years 6 months. This is FMS. What is FMS, sir? Fraud, willful misstatement, suppression of facts. And this is other than FMS. Correct, sir. Now, say suppose the court has held that it is not a case of FMS. You issued a notice as an officer under 74, but the court has held that it is not a case of FMS. Then the provision says that it is deemed that the notice was issued under section 73 and the demand will be valid for last 2 years 9 months. Correct? So if extended period of limitation, that is 4 years 6 months, is held to be invalid, then it is deemed that the notice was issued for normal period of limitation. That means the demand will be valid for this period. Now the question was, it is valid for 2 years 9 months. First part answered. Second, this 73 order has to be passed by a proper officer, na? What is the time limit for order to be passed by proper officer? CBIC clarified that section 75 says that order can be passed within 2 years from the date when you receive the order of the appellate authority or appellate tribunal. So appellate authority would have said you that this is not a case of FMS. Once you receive that order, from there you get 2 years time to issue 73 order. Let's have a look at the law. Issue. Section 75 provides that where the appellate authority or appellate tribunal concludes that the notice issued under 74 is not sustainable for the reasons that charges of fraud, willful misstatement, suppression of facts has not been established against a person to whom the notice was issued, then proper officer shall determine the tax payable as if notice was issued under 73. The issue is regarding time limit to pass order pursuant to the direction of appellate authority. See, show cause notice, you know, it is valid for 2 years 9 months. For last 2 years 9 months, whatever demand is there, that much he has to pay. But what is the time limit to pass order? The time limit to pass order in such cases would be as per 75, that is within 2 years from the date of communication of such direction by appellate authority, appellate tribunal or court. The determination of tax payable will be based on 2 years 9 months from the due date for filing return or date of erroneous refund as provided under 73. So we know the period. It's just that what is the time limit to pass an order under 73 once you receive the direction from the court, appellate tribunal or appellate authority. Clear with this? So to sum up, 74 notice issued, invalid, court said invalid, court gave it back to you, it is valid for 73. 73, you know for what period it will be. Now the question is, in what time should you pass the final order? The order should be passed within 2 years from the date when you receive the direction from the appellate authority, appellate tribunal or court. Mark it as important for case study. Case study. And now the other two circulars are very easy. I mean, the one for no claim bonus. I mean, very simple. Say suppose insurance premium for your car is 10,000. Now last year you had not claimed any amount from insurance company as insurance claim. So the insurance company will give you a no claim bonus. Say suppose no claim bonus of 40%, 4,000. So now you paid 6,000 rupees. Now the question was, GST will apply on 10 or 6? CBIC has clarified that it will apply on 6,000 because that no claim bonus is a discount and that discount is deductible under section 15 of CGST Act in valuation. So you will deduct it and GST will apply only on 6,000. Now second question was, you have not filed a claim last year. Have you provided a service to the insurance company of not filing the claim and for that you have got this 4,000 rupees? Is there a supply for consideration by you? Are you providing a service to the insurance company? CBIC has said no. Obviously no. People, it's not agreeing not to do something. Hey, I don't get into a positive agreement that I agree not to claim any amount under this policy and you will pay me 4,000. That is not through a positive agreement. Obviously, there is no supply for consideration. GST will not apply from the insured point. It will not apply from the insurance company's point as well. So, the clarification is twin clarification. One, GST will apply only on 6,000. Second, there is no service by the insured to the insurance company for not claiming an amount. Clear? Okay. Let's see. What will be the tax liability of no claim bonus allowed as deduction by insurance companies from insurance premium? No claim bonus is a permissible deduction under section 15 and the GST shall be leviable on actual premium amount payable by the policyholder. Further, it is clarified that there is no supply provided by insured to insurance company in the form of agreeing to an obligation or refraining from an act of lodging insurance claim during previous years. And no claim bonus cannot be a consideration for a supply provided by insured to insurance company. Obviously, I am not agreeing not to claim. People, why do I take insurance policy? So that I can claim. And imagine I am signing that I agree not to claim, you give me no claim bonus. That's not liable. Okay. The next issue, you will mark it as important for case study. Okay. This was interesting. See, banks are not required to generate e-invoice. Now, what about banks selling gold coin or some other goods or gold bullion, biscuit, gold biscuit? When they are selling these, whether they are required to generate e-invoice? CBIC clarified that the relief from not generating e-invoice is at a entity level. So if bank is not required to generate, they are not required to generate for any transaction. Doesn't matter what transaction they carry out. Same way, SEZ unit, for any transaction, no need to generate e-invoice. Transportation of passenger service provider, for any transaction, no need to generate e-invoice. So it is at entity level, not at transaction level. Let's see whether the exemption from mandatory generation of e-invoice is available for entity as a whole, or it is only for certain supplies made by such entity. So whether bank will get only for banking transaction or for all transactions. Let's see. It is hereby clarified that the said exemption from generation of e-invoice is for entity as a whole and not restricted by nature of supply. See the illustration. Banking company providing banking services may also be involved in making supply of some goods like bullion. The said banking company is exempted from mandatory issuance of e-invoice for all supplies of goods or services, and it will not be required for any transaction. Okay. Coming to the last circular, very small circular again. You think what will be the answer? Is GST applicable on accommodation service by Air Force mess to its personals? To Air Force officers. Air Force mess providing services to Air Force officers. See, any service by government enjoys an exemption. Is it, sir? Yes. Any service by government is not liable to GST. You remember there are only 4 things which are taxable. Department of Post, transportation of goods or passengers, aircraft or vessel related services, any service to business entity. But here when you are providing to personals, are you providing to business entity? And that's why it will enjoy a exemption. That's what CBIC has clarified, that any Air Force mess or any other mess run by government, if they are providing service to its personals, then it will enjoy a exemption, because any service by government or local authority to any person other than business entity is exempt. Okay. In fact, the last one is even more simpler. See, if banks issue RuPay card, government gives them an incentive in the form of subsidy. Whether that subsidy will be liable to GST? Very simple. Valuation. Subsidy given by government for RuPay cards. Sir, government subsidy is not liable and it will not form part of value. Exactly right. That's what is clarified, that it does not form part of value as it is government subsidy. No GST, sir. Obviously on that subsidy GST will not be applicable. Clear with this? Okay. Last discussion will be 2 changes in customs, very small changes. Now, do you think that undervaluation of goods happens in customs? Like say suppose the goods is worth 1 crore, there is an undervaluation and people are importing for 60 lakhs. Possible, sir. Now for this, what government has done is, government has come up with customs assistance in value declaration of identified imported goods rules 2023. What are these rules, sir? Board along with standing committee and screening committee will try to find out transactions where this is being done. They will try to find out at the goods level that these are the goods where this is being done. In such cases, it will scrutinize or tell the officers to be very careful with regard to those consignments, and importer will have to give additional assurance, additional obligation will come on the importer to prove that there is no undervaluation. So that is the basic aim of these rules, that they will try to find out cases where goods are being undervalued, then importer will be obligated to meet other requirements to prove the genuineness of the price. Now this will not apply on certain transactions, like when government itself is importing, or there could be a case where import is for export purposes. In some special cases, this will not be applicable. What about exempted goods, sir? Again, it will not be applicable. Let's have a look at it. Section 14(1) of Customs Act lists out certain matters which may be provided for in the rules. A said subsection was added in Finance Act 22, but it was not activated. Now it has been activated with this CAVR rules. The additional obligation of the importer in respect of any class of imported goods. They will try to analyze which goods are being undervalued, and the checks to be exercised, including circumstances and manner of exercising thereof, as the board may specify. CBIC. Where the board has reason to believe that value of such goods may not be declared truthfully or accurately, having regard to the trend of declared value of such goods. This said amendment is a measure to address undervaluation, and the rules to be framed by government, whereby board can be enabled to specify additional obligation. So rules will be framed by government, board will put additional obligation on the importers for certain class of imported goods where value is not being declared correctly. CAVR 2023 can be applied only by following the processes referred in the rules. What is the process? Written reference must be given to the board by screening committee. Then once the detailed examination is done, it will be examined detailed by evaluation committee. Then they will conclude, and thereafter screening committee's recommendation will be given to the board, and then finally board will specify the identified goods, not just randomly. Analysis will have to be done, and for that committees have been set up. Exceptions. These rules will not apply. Let's see. Import not involving duty. Goods where tariff value is fixed by board. If tariff value is fixed by board, how can there be an undervaluation? Even if there is an undervaluation, you'll have to pay on tariff value. Goods which attract import duty at specific rate, that is quantity based taxation. Imports made under authorization of license under FTP, though the law says FTP 1992, even today the act remains same. Though FTP 2023 has come, the act, Foreign Trade Development and Regulation Act, is same. Then imports where buyer and seller are related and investigation has already been completed. Project imports, government imports, non-commercial quantities, import for re-export, and such imports as may be specified by the board. I don't expect a question on this, but some exceptions can be asked in the form of MCQ. So just mark it for MCQ purposes. Okay, and the last change is phased implementation of eCash ledger. As you are aware, eCash ledger has been introduced in customs as well, where you will deposit money and use it to pay custom duty. Now eCash ledger is there in a phased manner. So government has said that in some transactions there is no need to follow eCash ledger. Till 30th April 23, there are transactions where no need to follow eCash ledger. From 1st May, one of those transactions of international couriers, they are required to follow eCash ledger from 1st May 23. This is applicable for your exams. Now let's see this. 51A provides that CBIC may by notification exempt certain deposits to which eCash ledger will not be applicable. Accordingly, in the first phase from 1st April to 30th April, CBIC has exempted the following deposits. Let's see. First one, where custom automated system is not in place, like border areas, land custom stations near Bangladesh, near Nepal, there will not be a facility of custom automated system. There you can't deposit in eCash. Accompanied baggage, obviously, or with respect to goods imported or exported at international courier terminal. This international courier terminal, with effect from 1st May 23, the exemption was removed. So that means for courier shipments, ECL will have to be used, or other than those used for making payment of duty of customs, IGST, compensation cess, interest, penalty, or other amount payable under this act. Anything other than the normal duties is again excluded from eCash, because at present the tool in eCash is only to pay the duties of customs, not anything else. Clear with this? Okay. Wishing you all the best for your exams. We will come up with a FTP video as well. Till then, study well. Take care.